Okay, what's going on? Good evening. Tonight is Tuesday, July the 15th, 2025. And what we're going to be looking at tonight is going to be mostly NQ. We'll kind of review dollar, take a look at Bitcoin just very quickly here. But mostly futures, indices, and dollar. And I'm going to take a quick look at SPY and QQQ. But let's keep our focus on the NQ positions today because we did have a little bit of choppiness when it came to the session. Just to kind of show you guys, remember what we're doing here, right? We are filling out. So let's see if I can show this here really quickly. Okay. 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 So just so we guys can see here really quick, we are filling out, right, the DRC. All right. So just to kind of give you guys an idea what mine looks like. All right. Okay. And so what you want to do, right, is let me do this really quick. What you want to do is get this document downloaded, right? I gave it out for free in the Telegram. So if you guys aren't a part of the Telegram, definitely join that free Telegram. Now, the other thing I would say very quickly here was like I said, today was just kind of choppy. So let's just jump straight into the charts actually here. Um, and get right into this here. Okay, move this here, move this here. Okay, cool. So let's see. Perfecting your swing is hard. Nice shot, man. Okay, cool. So just really quickly, so just to kind of show you guys, like when you're looking at the pre-snap read or the pre-market analysis, where it says bias, key levels, new drivers, setup expectations, well, that's where I start to frame what's called a game plan, right? So in the morning time, when you're looking at the charts here, you got 15 and 5, right? What I was looking for before we even got started, let me make sure everything's good on here. All right, what I was making sure before we even got started this morning was I wanted to see lower pricing, right? I wanted to see because we're at all-time highs and because overnight pricing, right? So 15 here, because that overnight price had launched, right, from daily open, had launched, made new highs, higher low, and was already, pushing overnight. I wanted to see profit taking of these individuals, if that makes sense, right? And so taking a look at that, like I said, that's all we were pretty much focused on throughout the day. Now, when you come into the session, I like to give back below daily open. So like something I really focus on when it comes to point of interest is giving back orders in alignment with those areas as well. And so the concepts of trading are buy low and sell high. So if you sell something high on the day, you want to give it back low on the day, right? So this was a perfect example of where that daily open location was to close out the day. All right. So kind of going into this right now, when I first got into New York Open, I'm going to break down the 15 to 5 and the 1 minutes, but also what I want to kind of show you was that we were having a massively bullish day, right? So this was a massive bullish day when it comes to dollar index, and it just exploded in price out of that area, hitting our target of 98 and 98.50. So it looks like we could be coming up for this area, and we could be coming for that manipulation of that 150 level. So that's very interesting. And then coming into this on a higher time frame perspective, like I said, I always ask myself this question: Are we overbought or oversold on higher time frame? All right. So are we over sorry, are we overbought or oversold on higher time frame? All right. And so you got to ask yourself the question about location, right? Are buyers going to be taking profit in this area that will produce a really, really good short position? And so all of them were at positions where I thought we could see, potential supply areas being met, right? And especially with YM and like US 30 here, I was wanting to see if you bought pretty much yesterday and didn't take profits or didn't trail risk, if they were going to, people were just going to hold on to that. And obviously, you see what happened to individuals that did that. And I'm pretty sure my good friend Tay sold this position at New York Open here today down to the LOD and previous day low. So that was a really, really good play there. So overall, we had when you're looking at the bottom, right, on the market review day type, this was a bearish day, right? This was definitely a bearish day. And I'd say, we anticipated that coming into it. Okay. And so back to NQ 15 and 5, and we'll jump into a smaller time frame to kind of see New York. Now, jumping into New York Open, because it has, the key sessions, it has 8:30, 9, 10 a.m., 10:45, 11:15, and 12. And those are the key times that I personally pay attention to the markets, okay? And so what I'm going to do here is kind of go full screen. So I like to focus on the first 5 minutes and the first 1 minute, obviously, of a New York Open. Now, me personally, I did have a 1 minute open on a side window, but I was playing 15 and 5 setup, right? I was just wanting to see if we were going to be able to position down and get to these lows here, which was around the 23,131s, like 150s and lower. I was wanting to see if we could do that. Now, the first 5 minutes, this was eight. If you guys notice right here, this is 8:25. Make sure that's you guys can see that. Okay, so this is going to be 8:25 right here to 8:30, and then 8:30 to 8:35, right? So as you guys can see in that first candle, I always pay attention, which I showed you guys, right, minute one, to what type of candle did we have? And we had a reach manipulation candle, right? Because price reached here, this white candle. Let's move this so you guys can see the time at the bottom. All right, 8:30 to 8:31. So the price ran up, then came back, closed here. Then 8:31 to 8:32, what'd you get? Break, right? So this is what I was seeing personally, um, right at the open on that 1 minute, right? So I was seeing this. We ran up, right? Grabbed liquidity, but we were still holding in this area. So if I was going to be bullish in this area, especially because we were so bullish overnight, I would have wanted to see more price action. But I knew that, with expansions and, that overnight price being the way it was, there wasn't really that much high chance that the buys would just pump out to take all-time highs from here. I just didn't see that personally, right? So from 8:31 to 8:30 to 8:31, that's what you get. Now that next candle prints, right? Boom. This is amazing right here. This is what you want to see, right? When you're looking at 1 minute price action. Now, what usually happens to most traders? Most traders, when they see this setup, they don't wait for the pullback to back above New York Open in bearish conditions, right? Because they don't have discipline. They just haven't seen the setup enough to understand. Now, another thing is, I want you guys to understand is something I got from Larry Williams is that if you're taking a sell position, your stop loss is going to be in alignment with the high of day, right? So if you notice something, they took liquidity, right, giving you a new HOD, right? So if price was to break lower, you don't want to sell this breaking lower because then it's usually going to retrace and tear up your order, right? So you want to wait for that pullback to New York and then already know counting down how much risk that would be to the edge high because I want to have my risk in alignment with HOD, right? And so that's what I was doing. It was like as soon as it broke lower here, you have time, right? Don't force it. It's not gonna. You don't need to force it. All right. So counting down from the risk, right? Because I like to count. It's a game of risk, not a game of profits. Anybody that just plays for profits probably doesn't. You know. Let's see here. Okay, work, dude. Okay, so from here to here. So look, this is about what does this fit our game, right? You guys kind of get used to playing the way I play, right? We love about a 20-point risk. 25 is going to do it to where I put one contract on and have to build into it. Now, if it's a 20-point risk, right, then I'm probably going to come out with two contracts, maybe three across all five accounts, right? And frame up edge and play the probability, right? So what do we get right here? All right. Instead of selling, as it's knifing down, which a lot of people do this, right? Like imagine right now, really quick, I just want to show you guys this. When you think about plotting positions, because I've done a lot of plotting. If you plot that position, look, you're plotting yourself inside the push down. If you're gonna get yourself inside 5 minute supply or 1 minute supply candle, which would be when I'm saying 1 minute supply candle, I'm speaking on this candle here, you're gonna want to wait till price returns back up, right? And so that's where you want to be striking is when price is above, right? Printing above that 23,200 and above New York Open. And that's where you're able to put your risk here and you count down like I showed you guys to in that area, that's a 20-point risk. And if you're very tight with your risk, right, you're putting your risk here for a 10-point risk, and you're seeing this from there to there, right? So liquidity is in the eye of the beholder, edge is in the eye of the beholder as well, because you have to have experience to have, familiarity of what's going on and like what to look for, right? So remember that, right? Edge is in the eyes of the beholder, and liquidity is in the eyes of the beholder. Okay. So for me personally, made that low, came back up. Now I didn't strike it exactly above there because they didn't give me the pricing on futures. They actually gave me a little bit lower in the 97, right? So it was right below, and then I ended up putting my risk right here, right? It was about a 15-point risk from where I got in. Okay. And so all I wanted to see, because I'm a technical trader, right? All I wanted to see was price go lower, break the 5-minute structure, right? And then I wanted to be able to cover as we broke that area and start to trail risk down based on my rules, right? So let's say essentially here, based on that, I had one contract in, because another thing I always talk about is shorts are short-lived, right? So I'm looking to scale out of shorts a lot faster personally than I am the buy positions, just because we're in a market that tends to go up. Okay, so the sell pretty much, let's just say hypothetically, looked like this: 23,191s. Um, Risk would have been here, right? And then you had a TP of this area here, right? And you guys see when you're looking left, what that looks like on the 5-minute, right? You're just looking at this area right here, pretty much, right? And so when I say shorts are short-lived, what I mean is when price makes money available, you got to have a system to pay yourself, right? And if you guys are in the Discord, right, or in my free Telegram, but most likely we'll be going live on my personal channels on like Fridays, but if you're in the Discord, we'll be going live like Mondays and Wednesdays, right? And so you'll be able to take these setups live with us and be able to, be more hands-on. And that's where I'll be going over the risk and breaking down more stuff. But as we start to break down, right? Price starts to break down. You've got to have a plan, right? So 5-minute right here, this was 835 to 840, and then 840 to 845, right? Price kind of pops back up, right? Scaring people, probably, making late players, get out. But we had edge, right? And so once we hit this level, bam, price was done. Now, this as soon as that price takes that level, you got to be thinking inside of a short here. Either you're trailing risk down, like this is a one. If you played the 1 minute the most, like I play 15 fives, I'm just kind of showing you guys because I know a lot of people play 1 minute. When that price delivers that liquidity, you've got to be trailing risk. You've got to be securing the bag at some point, right? You have to be doing something. I like to run a 2 contract system so that like I can basically go here and one's taking profit on that position, the other one's going break even, right? And so that's essentially the first position that we took. We trailed risk down, then price came back and took us out for a small win, which was cool. And so that was how the first trade went. Okay. Just at New York Open. The New York Open shorts, beautiful, came down, amazing, cool. All right. Now, when you go and you study the next play, all right, that we took, because this was like I told you guys I was playing with house money, because I was like, okay, well, um, after I took my partial, right? So that first 5 minute, bam, we get that 840 to 845, first 15 minutes, bam, they delivered that liquidity. We trailed risk down. The remainder of our trade, after they came down here at 9 a.m., buyers stepped in at 9, right? But what did they essentially do, right? Price had broke structure lower low. That's all it really had done, right? That was all that was just a lower low. When you're looking at like a 5 minute body closure, and then you're looking at a 15-minute body closure to body closure, right? Lower low candles showing signs of weakness. Now, what do we look for in sales? We love to see kind of like how this price is here, how it goes and runs up and then does this, right? Break structure. Because what does a noob do right here? A noob starts to buy immediately, right? Immediately starts to buy here and thinks price is going to take it up higher. And then what does price do? Comes up and makes a lower high. Why does it do that? Because this is sell side mitigation, right? So when I go like, and when you come in the chats and you just took the most amazing short that you can take, price goes and hits your take profit, and then you come in and buy this position back up and wonder why it comes back and takes you and doesn't go to the HOD like you're used to. It's because we're at all-time highs, right? This is you got to adapt. This is a different market, baby. Like, you gotta like the main thing I would tell you is stay on that 15.5 and be able to read price action on line graph, right? Because look at it. You've got lower low, lower high, lower low, lower high. Nothing about this is telling you to, really buy unless you have a legit signal and you're able to, protect yourself and understand what you're doing, right? Otherwise, it's really just if you took that short at New York, that was beautiful, right? But what you got to understand is they're never usually going to give people the short on the or a buy, right? Let's just flip this upside down. If this was a buy, right, and price runs, this is what mitigation is, guys. Price would run, people think it's just going to go forever from here. No, it's not going to do that, right? Price is going to go and show those people love at first, take that liquidity, pull back, and then go, just like it did on the sell side today, right? So you're looking for the same situation once you've got the close on the 15-minute structure technicals. You're not the person that comes in and buys this back up because you're at a point where all-time highs. Like if we were a lot lower in the spectrum of things, yes, it makes sense, but we're not, right? We've been buying up all night and buyers were in profit. Okay. And so my point is like I said, is just because that first New York short takes that liquidity and doesn't, just fall over, doesn't mean to come in and buy that position, right? A lot of people do that. I used to do it. Don't do it. Okay. Okay. So we covered the New York position, right? Now what you're looking for is the mitigation, right? If price can actually come back and make the lower low, came back at 915 and made another lower high. Now this is where I started reading price. 915 to 920, sign of weakness, and then 920 to 925. Excuse me, 915 and 920 was a sign of weakness, and then the second candle, 920, 925, that's where I started getting busy on this trade, right? Now we're jumping in. Like all we're doing is going from right here, 915, right? On the 15.5 over to the 5 and 1, right? So it's 915. So now my remainder of my trade, remember I showed you guys, right? I took profits on the first break, had a partial that was break even on the remainder. It comes and hits my break even for us still. I'm still green on the day. I'm still preserving capital, protecting myself, right? Now, I told you guys, first candle of weakness, right? Price never even went above 23,200 or back in the supply or New York Open. So sign of weakness was perfect because you're looking for a specific fib retracement as well, right? On a pump back up. I love 71%. If price can't get back above 71 and close body candles, I know prices are going to go to take HOD and push past that supply. It was going to fall over and trap those individuals that were trying to buy the first break. Okay. Okay. So second candle, 929.25. In the second candle after the sign of weakness, right? You guys have this on recording. After the second candle, right? And the second, so after the first candle of sign of weakness, inside the second candle, I want you guys to start looking for 1 minute mitigations. So you've got the push up, first sign of weakness, you've got plenty of time. And the second candle, what you want to do is start to frame the 1 minute mitigation to the sell side, putting your risk here, focusing on getting out and taking profits or trailing risk here, right? Which was right below the 5 minute lows, which ended up delivering, right? That's something I want you guys to notice, right? And I'll show you guys more of this on the buy side. But when you're attempting a 5 minute setup, I like to see a 5 minute sign of weakness. I like to see the second candle as a sign of weakness, and then I'm playing my entry inside of the 1 minute mitigation inside that area. So, for example, this is 919. If I go over one, that's at 920. We're in the second candle, correct? You guys see what I'm saying here? So if I go back over and I'm over here, right? 918 on the far right. Now I'm on the right side. Now I'm going to 919, right? Now look left over there. When I go to 920, it's going to go to that next candle. Bam. All right, so you guys see right here, you have a 1 minute mitigation to frame up edge, right? And where is it? After the first sign of weakness, second candle. So remember that, write it down. I promise you, it works. 10-point risk, beautiful setup, right? When you're talking about probabilities and edge, and to your target, you're looking at over a 1 to 6, right? So I could come into this with 2 contracts and really, or probably 3 on this type of setup because it's 10, right? To play down to here to cut, and then to cut 2 and probably just have a runner, right? Because that's what I do with a 10-point risk edge setup. So that was a pretty nice position. What I ended up doing was taking the position, like I said, on that second candle, and my entry was around. Let me see where I wrote it down. I know the timing. The timing was right in here. So I took the area right in here, and then I ended up taking some more profits right in here. So I'm kind of walking you guys through exactly what happened and why I ended up at the end of the day buying a small position because I had house money on shorts down, but I wasn't getting the pushes lower that I really wanted, which the areas I really wanted were below daily open, inside the imbalance, right? Inside the shit price from overnight that just basically all this is overnight that just rallied up. All these people are in profit. I wanted to come get them, right? But price wasn't showing me that at 11:45 going into 12. Okay. And so in profit, the last position that I ended up taking today was the same situation, but upside down, right? So what ended up happening on those shorts that we had, they came down, they took profit, right? I didn't see price jumping out of the window at 12 to 12:05. What I seen was a sign of strength. So in my eyes, what I seen at 12:05 was this, right? I had shorts from up in here, right? Price came down, took the 5 minute, 15-minute low. We ended up trailing risk, or excuse me, trailing profits or trailing the risk on that and taking profits right at the break. And then we started to see signs of buyers stepping in at 23,100. And so seeing them step in here, right? For me, I said one side of strength, second candle, right? And then I started going down to the 1 minute, right? And I started seeing, okay, we have a 1 minute demand. I can either place my risk here, 23,085, or right here at that low, 82, right? To start to buy this position up, right? And so for me, I was already pretty much out of the markets for the day. And then the price came here, I think it was on a five and gave this other. I had to see where the candle gave, and then right in here there was one candle, and then it came down like one candle, somewhere in here. So let's just say I took a buy in this area because it came down. I was taking the buy here, and I was accepting risk right on that trade to here, and all I wanted to do was get above. I really just wanted to get to like the TP that I wanted was New York Open 23,200, right? To finish the day. But what I'm really looking to do here, since I'm already in profit from short number one and then short number two on the break, all I'm really looking to do here is go to where I can go a 1 to 2, right? So I can 2x the risk that I have on the setup and then be able to go risk off, right? So price basically comes in here. This is on a 5 minute. Okay, cool. I just want to make sure it's on the 5 minute because I wasn't even watching in the 1 minute. I was only watching 15 and 5 here at this point. Now, as soon as price right here broke, so this is technical stuff, right? This is something I pay attention to, okay? As soon as the body closure was here above this area, which is a technical new high, right? You got to understand price could come back into the demand before going higher. So, with having only one contract, right? And only having um only having one contract on the trade and already being up, there was nothing for me to want to lose on the trade, right? So I moved my risk right here. Okay. So that way it just protects the trade. And then throughout the rest of the day, we ended up pushing up again. We had another technical break. So this was the first one, then this was the second one, right? So we're starting to really push. And I'm thinking that maybe we can push that 23,175, 23,180s, right? As you're watching over here, right, you're seeing from 12:30 to 12:45, and then 12:45 into 1, right? This is the pump that we're seeing right here, right? And so price is pumping up right now at this point because, like I said, I'm already up for the day. I'm wanting to see the break of structure. I'm wanting to see the technical break like this higher. So I'm wanting to see at this point of the day is that so I can secure some profits to see if it'll go up and continue up to my goal, right? And so as we got to this point and price closed right here, we had another candle open, and that candle showed me one more sign of strength, and that was enough for me to want to trail my risk up into here. Right now, remember this is across all all five of the accounts. So it's still a pretty good day. You're looking at over almost five, $700+ on a day, plus the other two trades that hit pretty well, right? And so I wanted to secure the bag to the top end of the imbalance. And that's usually where late traders that buy way too late, they're putting their risk there. We're trailing our risk there. Okay. And so bam, price goes. We didn't see too much more signs of strength above this area, right? We were looking left inside the supply, seeing if we were going to actually break higher. And right after that, I believe price started to break down um, somewhere in this area, the 23,180s, right? So price started to break down, bam, and it hits that trailing risk. So we ended up having that plus the two shorts, right, where we took a good profit here, came back, hit break even in the second half, entered another trade, ended up going two contracts here, which was really nice. Was able to take two off and then trailed one down, which that was probably my best trade of the day. Was that like 9:15 down to 9:45, 10 a.m. And then this one wasn't bad, and then a bad of a selection of a trade. But more importantly, I think today where like the section I show you guys about improving was just management. I was able to manage and maneuver and really play edge throughout the whole day. Now, by the end of the day, right? I know we were calling out some shorts, and some people were very patient enough to hold like this area up in here, and it never came back for their risk, and they were able to hold that into the end of the day, right? Liquidation time with Top Step is 3:10 p.m. and right at 3:10, right? This would have been 15 to 15:15. So this would have been 3 to 3:15 right here, guys. They're clearing daily open, filling the imbalance right at the close of the day, right? Delivering algorithmically, right? So right here at the end of the day, you've got the imbalance fill, right? They're coming down into it. They have the double bottom W pattern here. I mean, that's clearly to me, a W, right? So W pattern from overnight, and they crushed down to that level, right? So we were able to maneuver right on those shorts at the beginning. A lot of people started just buying up, right, to push the price back up. They probably held and never had a risk management strategy to trail some risk up in this area. Price died on them, and then we ended up selling into that, which was really fire. Probably the best move of the day, 9:15 to not to 10 a.m. And then so like that was my best trade of the day. And then what else is there? And then what I learned today is just, just be patient. Be patient, wait on edge. Don't try to force things. That was pretty much, I mean, what it came down to today. I mean, like I said, I did pretty well today, especially when it come down to managing trades and just sticking to the script. So that's enough yapping for me. Like I said, guys, make sure you guys have joined the free Telegram or you join the Discord to soon here with Discord. We'll be going live, taking these setups live where you guys can take the trades with us. And then make sure, like I said, you join the free Telegram and gotten access to the DRC template because I think it's very helpful if you start going through having that pre-market bias, key levels, news catalysts that can help you. And then you're net, there's no such thing as perfection in trading, there's progression, right? You always want to be learning something, right? It can be from another trader, right? I love to study the industry throughout the day and just see how other traders emotionally are going at things, especially successful ones, right? It's not all about Lambos and, all that type of stuff. Sometimes it's really just about how the individual, um, actually is, and how they actually carry themselves and their character and, who they really are outside of just, what we can see. Okay. So you always want to be learning. And then changes I want to make from today into tomorrow. I'd say the biggest things that I want to change from today going into tomorrow is just, being just more selective and maybe sizing up a little bit on some of my positions because I feel pretty comfortable with where I'm at now with the wins and losses. I'm on like a 4 or 5 day green day heater. So, I mean, I feel comfortable with where I'm at. So I think the risk, I could size up just a contract or two at the initial move. And so that might be done tomorrow. And then, so that's the change that I need to make from today. So, yeah. So I hope you guys appreciate these DRCs. I think it'll be a lot more helpful with the actual template. And really quick, just to kind of follow up on what we're going to see for tomorrow. Let's do that very quickly here. Okay. So, we're at all-time highs. Just to kind of keep it, brief. We're at all-time highs. We're just kind of like toppling over. But to go into tomorrow, just from an intraday perspective, Let's do that really quick. We'll look at 1 hour here on the left, 15 here on the right, and understand where liquidity is, right? So we got 1700. Okay. And so we have that target, right, to the downside here. Previous day lows, low of the week, right? 22,800 key level. So that's going to be a key level now for me going forward throughout the rest of the week. 22,800. All right, because those are where the equal lows are. That's where the range low of the week is. As well as, I love to use Fibonacci retracements from low of week to high of week. And I think we could see, some retracements back into the 71%, right, inside the expansion. So if we overnight see some, push down, awesome. If we're kind of getting closer to New York tomorrow, then that'll be even better because if we can swipe that liquidity or push down into the demand of 22,700, especially overnight, right? Because the thing about it, if everyone's shorts overnight, what do those individuals have to do to make money? They have to cover, right? But if they hold this area, right, they drew on the liquidity that we were looking for, right? If they hold this 23,000 area, and then you start to see price, come here and start to build a case tonight, right? Then they have a chance to take here, right? And obviously New York shorts and all-time highs out. All right, so we'll be focused. We're not going to try to be, Nostradamus and just guess anything, or we don't need to be right. All we need to do is wake up tomorrow, see price action, and act on our edge without reservation or hesitation. Let's not make it any harder than that. So, with that being said, I appreciate you guys watching. Like I said, drop in the comments, just different things that can make these better, or maybe I can articulate the message in a different way. But again, I appreciate you guys and have a good rest of your night. I will see you guys on the next one.